Preparation of financial statement of companies. This is chapter 4 of CA Intermediate Accounting Paper 1. This chapter is divided into two units. One is preparation of financial statement of companies and preparation of cash flow statement. Now I am going to take one example from revision test papers of November 2020 to explain what are the requirements of Schedule 3 of Companies Act 2013 while preparing the balance sheet of a company. There are various companies: company limited by guarantee, company limited by shares, government company, foreign company, private company. All these companies are supposed to maintain books of account at its registered office as per section 128 of the Companies Act 2013. In case if the company wanted to maintain its books of account and other statutory requirements, documents relating to other statutory requirements, it has to be intimated to the ROC within 7 days from the date of its decision by the board. Now, let us come to Schedule 3 of the Companies Act 2013, where there are prescribed formats have been given while preparing the financial statements, and all the companies have to maintain its books of account and prepare financial statements in this prescribed format. There are various formats prescribed for various types of companies, especially like a company which is generating electricity, insurance company and banking company, and any other company which has been prescribed specifically. Otherwise, the one which we are discussing now, it is generally applicable to all other companies. Now, what are the requirements of Schedule 3 of Companies Act 2013? There are three items. One is balance sheet, statement of profit and loss, and cash flow statement. These three are the requirements. Again, there are certain relaxations given to certain companies, whether cash flow statement is required or not, that relaxation is given. Now, apart from these three statements, there are annexures like notes to accounts, which explains all the details of with more clarity persons who are viewing these statements. It may be a shareholder or a banker or any outside authority which gives true and fair view of the state of affairs of the company. Now, let us take one question which is given in revision test papers of November 2020, and we will focus on that particular example to understand balance sheet presentation only. Before getting into the example, I will just take you through the balance sheet as prescribed in Schedule 3 to Companies Act 2013. So this is the format which is prescribed under Part 1. Schedule 3 has got two parts. One is balance sheet and another one is statement of profit and loss. Okay. Now, this, as you see, there are four columns. One is particulars, notes, amount in rupees to March 2020. The balance sheet which we are talking is for the year ending as on 31st March 2020. That means the first column refers to current year numbers and the second column, that is the last column, refers to previous year. Every company has to provide information of 2 years, that is for one is current year and one is previous year, in all the financial statements, except for the first time after incorporation where they do not have any transactions before. So first time it will be permitted to give only one column. Otherwise, every company has to report 2 years numbers. One is of current year, another one is of previous year. So this balance sheet is divided into 2 parts. One, as you see, equity and liabilities, and other one is assets down. Okay, what equity and liabilities contains of is shareholder funds, which is again subdivided into 3 parts: share capital, reserves and surpluses, money received against share warrants. So there is a column called notes. So every item, see, if I just put some number here, nobody will understand. Why I am preparing these financial statements is to give true and fair view of my books of account to various people like shareholders, bankers, other entities who are lending money to the company, okay, or anybody who wanted to invest in the company. So they should have clear picture by seeing at my financial statements. So for that purpose, I will not be able to give everything on the face of the balance sheet. So I am giving broad items on the face of the balance sheet, and I am giving reference to notes, where in notes to accounts we discussed earlier that there are 4 items. One is balance sheet and statement of profit and loss, and cash flow statement, and notes to accounts. So this notes actually plays very important role for more clarity to the users of financial statement. And whatever prescribed in Schedule 3 is an additional requirement. It is not the only requirement. There are accounting standards prescribed by Ministry of Corporate Affairs which have to be mandatorily followed, and if there are any disclosures required as per accounting standard, then that also has to be taken care. We cannot say that this Schedule 3 is not prescribing that particular requirement, so I will not show. No, you have to strictly follow accounting standards, and whatever is prescribed here is an additional requirement. Okay, next, after shareholders, you see share application pending allotment. I am not going into detail of each items because it is a very lengthy explanation. If I get into detail, I am broadly explaining you because my object of this video is to explain one question from revision test papers. In pretext, I am trying to explain you the balance sheet format. And next, non-current liabilities. What are non-current liabilities? Which are liabilities which are to be settled beyond 12 months from the date of reporting period, or falls under non-current liabilities. This non-current liabilities again has to be divided into long-term borrowings, deferred tax liability net, other current liabilities, long-term provisions. Okay, and coming to next, current liabilities. Current liabilities, you have what are current liabilities? We learned current liabilities which are to be settled within period of 12 months from the reporting period, or which are to be settled during the business cycle, normal course of business cycle. Okay, then it falls under current liabilities. Trade payables, which I buy goods for manufacturing of my product and repay them, and other current liabilities, short-term provisions, any provisions, year-end provisions and all made which we are not, which the bills are not received, or monies are accrued but not due. All this comes under short-term provisions. Next, coming to part 2 of the balance sheet, that is assets. Non-current assets. Now, non-current assets consists of property, plant and equipment, which again to be divided into tangible assets, intangible assets, capital work in progress, where we are constructing some assets and all, intangible assets under development, if there are any other intangible assets which are under development like softwares and all, that has to be disclosed here. And non-current investments, if there are any non-current investments which we have invested for more than a year, then deferred tax assets net, like we have showed deferred tax liabilities net in under liabilities, similar way assets. And next, long-term loans and advances, again which are beyond 12 months from the reporting period, and other non-current assets. We have to divide all the numbers under these heads, and we have to disclose, and we have to give details of those assets under various notes, and we have to give these references to the notes. See, the reference numbers what is mentioned here is only a reference. You can have any reference based upon your series of two notes. Okay. And current assets include current investments, if we have made any temporary investments. And inventories, this is inventories, again we have to have notes, what is finished goods, what is work in progress, and what is opening balance, what is closing balance. All these details will be given in the notes. Okay. And final number will be shown here. Trade receivables, again in trade receivables we have to show what is beyond 6 months, what is within 6 months, and what are good, what are doubtful, and what is the bad debt. All this we have to show in the notes. And cash and cash equivalents, this is nothing but cash balance, bank deposits, and here we have to give deposits with scheduled banks, other than scheduled banks. And if there are any lien in case of deposits, that has to be mentioned in the notes. Okay. Short-term loans and advances, if we have given any advances to the vendors, some or any temporary advances given to people, then it has to be shown under short-term loans and advances, or even related parties, any advances are given, okay, for temporary purposes. All these things will be disclosed here. And other current assets, if there are any other current assets like statutory amounts receivable like GST, income tax refund, income tax TDS receivable, all these things comes under other current assets. Broadly, these are the requirements of the balance sheet. Okay, this format is prescribed, and let us now move on to the example. This question is from Revision Test Papers, November 2020. The question is like this: on 31st March 2020, OHM Limited provide to you following ledger balances of after preparing its profit and loss account for the year ended 31st March 2020. That means they have already prepared the profit and loss statement of profit and loss, and they are asking you to prepare balance sheet. And they have given certain credit balances and some certain debit balances and some additional information which helps you to prepare the balance sheet. Okay. Now, while reading each and every item of the question, structurize yourself what workings will be required and how it has to be presented, and then you start your notes. Otherwise, you will waste time in thinking subsequently. Now, equity share capital 1 crore 5 lakhs. So you have to show how many numbers, what is the paid up, and what is the value. Next, general reserve. Next, loan from State Finance Corporation secured by hypothecation of plant and machinery repayable within 1 year. So they are saying within 1 year it is 3 lakhs. So it has to be shown under current liabilities, and balance 12 lakh 75, that is 15 lakh 75,000 minus 3 lakhs has to be shown under long-term liabilities. That you have to keep thinking while reading the problem itself. And loans unsecured long-term, they have given very specifically long-term, and sundry creditors for goods and expenses payable within 6 months. That means it is current liabilities. We said within 12 months, to be settled within 12 months from the reporting period. or within the business cycle, then it has to be treated as current liability. And profit and loss account, this has to be shown under general reserve, that is reserves and surpluses. Next, provision for taxation, short-term provisions, this has to be shown under short-term provisions. Next, coming to debit balances, calls in arrear. Calls in arrear refers to equity shares which are, somebody has taken the equity shares and we have called for payment and they have not paid, so this will directly get reduced from my equity share capital, so we have to show this reduction in the notes. Next, land, building, plant and machinery, furniture and fixture, all these are plant, property, plant and equipment. This has to be shown under fixed assets, non-current assets as tangible assets, so there should be a separate schedule for this, and we have to take net of depreciation to balance sheet. Next, coming to inventories. Inventories, finished goods, raw materials. We have to show it in schedule, what is finished goods and how much is raw materials, and both put together 26,25,000 to be shown on the face of the balance sheet as inventories. And next, trade receivables, 21 lakhs. There is we have to see if there is any additional information with respect to trade receivables, very doubtful, bad debts, that accordingly we have to show in notes. Advances, short term, they have specifically given short term, so we have to show it under short term. Cash in hand, balances with banks, both are cash and cash equivalents, so it has to be, both have to be added and to be shown under cash and cash equivalents. Next, patents and trademarks, 6 lakhs. This is intangible assets, it has to be shown under non-current assets after tangible assets. Now coming to additional information, the following additional information is also provided in respect of the above balances. Now 6,30,000 fully paid equity shares were allotted as consideration for land and buildings. So what they are saying, that out of the total allotment of paid up capital, there is 6,30,000 fully paid equity shares were allotted as consideration for land. We have procured land and we have not paid them in cash, we have settled them by issuing the equity shares. So this has to be, while under equity share capital notes to accounts, under equity share capital, you have to mention this as a information to the shareholders that this much shares were issued. Okay. Next, coming to cost of building, cost of plant and machinery, cost of furniture. They have given what is the cost, that is historical cost of assets. This is historical cost of assets, and what is shown in debit balances is after depreciation. Okay, for this you have to show in the schedule what is the gross asset and what is the depreciation and what is the net assets. Next, coming to trade receivables for rupees 5 lakh are due for more than 6 months. While discussing the part 1 balance sheet as per schedule 3 to Companies Act, we have told what are the receivables within 6 months and what are beyond 6 months have to be disclosed. So at the time of preparing notes to accounts, you have to show receivables more than 6 months and good 5,70,000, and balance from trade receivable 21 lakhs, reduce 5,70,000, and balance you show as due within 6 months and good. Next, coming to the amount of balances with banks include 27,000 with a bank which is not a scheduled bank, and the deposits of 7,50,000 are for a period of 9 months. Okay, this we said scheduled banks, deposits with scheduled banks and other than scheduled banks has to be disclosed in the financial statement. So we will be reporting this in notes to account, cash and cash equivalents, where it is other than scheduled banks, and these deposits are short-term deposits within 9 months, so it can be under bank deposits. Unsecured loan include 3 lakhs from a bank and 1,50,000 from related party. So unsecured loan, whatever we have mentioned, 12,70,000, what is given 12,70,500, the breakup they have given, the same thing has to be clearly mentioned in notes to account. Now they are saying you are not required to give previous year figures. See, well, they have very specifically given, otherwise we have to actually give previous year figures, and there is no information also to report my previous year figures, so I cannot give. And you are required to prepare the balance sheet of the company as of 31st March 2020 as required under Schedule 3 of the Companies Act. So now let us see how we will disclose these items in balance sheet. OHM Limited balance sheet as on 31st March 2020. Before we come to the balance sheet, let us now go to notes to accounts. First, coming to share capital. They have mentioned here the equity share capital. Equity share capital is given here and the reference number is 1. So the same reference number you have to give in balance sheet. So this is the reference number in the balance sheet. Okay, so accordingly, once you start preparing the notes, give the same reference to the balance sheet, which gives the explanation and clarity of the particular item. So equity share capital issued, subscribed and called up 10,50,000. We have called up for 10,50,000 at 10 rupees each. Okay, and out of the above additional information they had given 6,30,000 shares have been issued for consideration other than cash. So that is mentioned as a information. There is nothing other adjustment or anything. Next we discussed there is a debit balance which shows less calls in arrears. So 1 crore 5 lakhs less 10,500. It is 1 crore 4 lakh 89,500. Similarly, if there are any last year figures, then you are supposed to give similar information with the additional columns of last year and you have to show. Next, coming to reserves and surplus, here general reserve 21,84,000 and surplus, that is profit and loss account 10,50,000 it is given. See, we do not have the information what is current year, what is previous year, so we are not able to give. Otherwise, we have to give what is the opening balance of reserve and what is the current year profit or loss and what is the closing balance. But such information is not available, so I will be able to disclose only this much. Next, coming to long-term borrowings, secured term loans, loan from State Finance Corporation less 3 lakhs secured by hypothecation of plant and machinery which is due. That means they said it is due within 12 months. So that has been reduced and 12,75,000 is shown. And coming to unsecured bank loan, in additional information they have given 3 lakhs is unsecured and loan from related parties, again it is unsecured 1,50,000 and balance amount they have shown it as, it is shown as others. Okay, total 12,70,500 and secured and unsecured both put together long-term borrowings 25,45,500 and this notes is reference number is 3. Okay. And other current liabilities, loan interest repayable within 1 year 3 lakhs. What is 3 lakhs is, they have given that 3 lakhs is short term, which 15,75,000 here we have deducted 3 lakhs because it is payable within 1 year and hence it is shown under other current liabilities 3 lakhs. Next, short term provisions, we discussed provision for taxation, it is given in the credit balances 12,25,350 under note number 5. Coming to property, plant and equipment, you should have detailed schedule of property, plant and equipment. Here we have taken land, there is no depreciation on land, so land is taken directly. Buildings, we said historical cost is given in additional information 42 lakhs and net of depreciation they have given in debit balances place that 30,75,000. The difference between 42 lakh and 30,75,000 is shown as depreciation and the disclosure should be like this. And next, coming to plant and machinery, similarly they have given historical cost 73,50,000 and depreciation net of depreciation they had given 55,12,500. The difference between these two is 18,37,500. This we have calculated and shown as depreciation, and net amount is shown in the outer column. Next, coming to furniture and fittings. Furniture, again they have given historical cost and depreciated value WDV. The difference between these two, we have taken depreciation and we have disclosed the net of depreciation in the outer column, and total fixed assets 1,12,12,500. And coming to inventories. Inventories, we said we have to show raw materials and finished goods. Again, inventories also we have to show what is opening inventory, what is addition to current year inventory, what is consumption, and what is closing inventory. Similarly, opening finished goods, addition to finished goods, less sold finished goods, closing finished goods. This information we do not have, and hence we are showing what is provided to us, that is raw material and finished goods under inventories, and total 26,25,000. This is shown under note number 7. Trade receivables, debts outstanding for a period exceeding 6 months, other debts, they have not given anything doubtful or so. So we have taken what is more than 6 months and what is less than 6 months. If they have given any doubtful debts, then we would have deducted less provision for doubtful debts, and net figure we would have taken here. Next, coming to cash and cash equivalents. Cash at bank with scheduled banks, including bank deposits, and see everything they have. I said there is no need of this. They have given additional information, but because it is within 9 months, so it is not long-term investment. It is normal deposit only. But information is given additionally here that within 9 months there is some deposit which is maturing. So 25,66,500 with others. With others means other than scheduled banks they had given. With non-scheduled bank is 27,000. These both put together we have shown under outer column 25,93,500, and cash in hand it is given in debit balances 3,15,000. Both cash and bank and cash in hand we have shown here. If there are any, this deposits is kept on lien with for some bank guarantee or for some any other purpose, then we have to mention that this particular deposit is under lien with so and so authority, like that. Okay, now coming to balance sheet. Now we have seen notes to accounts. Now we are going to balance sheet. Now balance sheet, equity and liabilities and assets. While explaining part 1 of Schedule 3 of Companies Act, I mentioned there are two parts. One is equity and liabilities, another one is assets. So shareholder funds, under shareholder fund, share capital, here notes is given, note reference is given 1, and this is the amount. If somebody wants to know how this amount has been arrived, they can go to that particular note and see. And reserves and surplus, similarly it has got 2, general reserve and profit and loss. Again they can go to note number 2 and they can see how this number has come. And non-current liabilities, that is long-term borrowings, 25,45,500, which is mentioned in note number 2. Note number 3, it is divided into 3 parts: trade payables, other current liabilities, short-term provisions. So all these amounts, the breakup of these amounts are shown in respective notes. There is no adjustment or any other information which is given for trade payables, so the amount has been taken directly. Otherwise you may have to give note reference like MSME, non-MSME, like that. So total equity and liabilities is coming to 1,98,94,350. And next, coming to assets, non-current assets, property, plant and equipment, this is always net of depreciation. So this amount what is given here is 1,12,12,500 is net of depreciation. And intangible assets, patents and trademarks, again it is non-current assets, 6 lakhs. Next, coming to current assets, inventories, note number 7, which has got fixed finished goods and inventories 26,25,000. Trade receivables, note number 8, beyond 6 months, within 6 months, 21 lakhs. Cash and cash equivalents, which contains cash balance and also deposits with banks, and bank balance 29,08,500. And short-term loans and advances, short-term loans and advances is 4,48,350. There is no adjustment or any other additional information is given. So we have shown directly the value here in the outer column, and total of assets is 1,98,94,350. See, remember, this note reference is only indicative, and it is not that I have to, for shareholders it should always be 1, for reserves it should always be 2 or anything. You can have your sequence of notes, and accordingly you can prepare the notes to accounts. I think this gives you a clear understanding of part 1 of Schedule 3 of Companies Act 2013, how to prepare a balance sheet. And remember, this is for other than Ind AS applicability. This is not Ind AS, it is IGAAP, under IGAAP, not under Ind AS. Okay, thank you.